Break out of work and join us for a couple minutes. Before we begin, I'd like to set up a couple ground rules. Ground rule number one, we're going to have all phones on mute during the experience of the webinar. That's going to get rid of any sirens in the background, any weird sounds on phones. I'm sure you've all been in meetings where that happens from time to time, so we're going to avoid that. The second thing is we're going to hold questions to the very end. So if you have a question, feel free to put it up in the last 5 minutes. I'll tell you when. But until then, we're just going to go through this process. As a way to welcome, my name is Eric Hamasfar, and I am the product owner of StateTrack, a legislative tracking solution that some of you may be very familiar with, but we won't spend too much time on that today. I am joined by Clyde McGrady, who... Clyde, do you want to go ahead?
Yes, I'm the insurance analyst here at CQ Roll Call.
And Clyde is very, very modest, but he's not just the analyst. He's actually the lead insurance analyst, and he holds a master's in public finance from New York University, and is also a very proud alum of the University of Georgia. All we hear is Georgia Bulldogs all day long around the office. He's even wearing red today, I would imagine, in honor of UGA. So leaving that silliness aside, we're going to go forward and talk about the issues today. So I want to start with why insurance is such a big issue in the States, and it's a huge issue because insurance happens to be regulated mostly at the state level. Clyde, can you give us a little information why that is?
Yes. Well, insurers are, the state regulators would say that they're closer to the industry. States have, they have individual needs, and it's harder to regulate at a federal level, so, disconnected from what's going on in the states. So, they say that insurance regulation is stronger if it stops at the state. So there are organizations like National Association of Insurance Commissioners, National Conference of Insurance Legislators, and they get together and they come up with model laws and national guidelines. But for the most part, it's a state regulated industry.
So would it be fair to say because the states are closer to the people, that's kind of the right place for it to all happen?
Yes, I would say that.
Excellent. And Clyde, from everything you said, and then you look at the slide that we have up right now, I promise you there's actually a little bit of red in that slide. I swear to you there is. But if you look at it, states have currently passed or currently introduced 18,532 insurance bills this year so far, whereas the current U.S. session is all of 132 bills.
Yeah, they're probably all related to terrorism insurance, probably.
All the U.S. bills, right?
Yeah.
So why is Washington state legislation so vital? You see the number 18,000, you say, well, Eric, that seems like a lot, but how many of those are being passed? What's happening to them? How can I know? What do I need to know? And the dangerous things about bills in the states is that a measure can go from introduction to passage within days. Clyde, I know you've seen that. I mean, that's a really, frightening thing for someone watching the insurance industry, right? You have to be on it.
Yes. Yeah, and it's usually with a lot of consensus within these state houses and state senates. You see a lot of bills pass unanimously. I think because by the time it comes to the floor, it's been worked out, and it's not a very high, insurance is not a very hyper-partisan issue, so they can usually get a lot of agreement on things.
Excellent. And to kind of hit that a little bit more, the next slide talks about how not only is it a bipartisan issue, but in 30 states, a single party holds both houses of the legislature, and that eliminates even more opposition. In 23 of those jurisdictions, the ruling party also inhabits the governor's mansion. So quick work there, right, if you have no opposition. And the other thing is that most states, as Clyde knows only too well, have compressed legislative sessions, which really heighten the urgency in the state. Clyde, I assume you see from time to time states really bouncing, and getting things done in a really fast period of time, and you go from state to state, right?
Right. Yeah, I cover, all 50 states. Some states are, more active than others. Some do have a compressed legislative schedule. Some have, they have special, sessions after, in their regular, like, I think Florida is a state that does that.
Florida and California are famous for those special sessions, I'll tell you. And some states didn't even meet this year, so that means next year they may be a little bit more active. Texas didn't meet this year.
Yes, correct.
So I'm sure they usually have quite a bit of insurance issues and all kinds of other issues just bubbling up from all over.
Yes. But even Texas has like a non-legislative session where their committees will kind of gather to work out, to get like an agenda of things that they can work on for the actual session.
For the next session. Yeah. So they are getting ready. They're doing stuff. But we just don't have them lit up in our state track maps. So without further ado on that, let's go to the top 5 issues that Clyde, you and I talked about, and you said, Eric, this is really where the rubber is hitting the road. And we'll start with rideshare laws. It seems like a good place to go, right?
Great transition. Rubber hits the road.
Yep.
So the sharing economy at large is growing rapidly, and one of the largest sectors in that economy are rideshare companies, like very popular, like Uber and Lyft. Where you have a driver who downloads a mobile application, they use it to connect with people who need rides. And in a lot of places, they're kind of supplanting traditional cab and limo companies. And how this is a problem, among other issues like background checks and public safety regulations, is insurance, because you have different phases of rideshare activity that requires different levels of insurance.
Wait, so Clyde, you're telling me that, when they're just driving around with that app on, they're paying a different insurance rate than when they've got someone in the car. How do they make sure they're doing it right?
Yes. So what groups like the Property Casualty Insurers Association of America, or PCI, they've done, they've worked with Uber and state legislators to come up with this compromise language that they're trying to get through a lot of state houses. And it's an auto insurance requirement. You have, typically it covers, I think, $25,000 for property damage, $100,000 max per incident, $50 for one person in an accident. Now that's kind of in the weeds, but it's just to give you an idea of the coverage being lighter for the driver if they don't have a passenger. Now once they accept a ride request, that usually bumps up to $1 million in overall liability.
So they're making sure that if I'm riding in an Uber, I can get my money back. Hopefully for my injuries a little bit easier, right?
Yes.
That's the idea. So I can feel pretty confident getting into a ride-sharing car.
Yes. This I think it's all developed.
Well, I should ask this.
Okay.
If I feel more, should I feel safer in Virginia? Is Virginia one of the states that have that?
Yes, I think Virginia did pass a rideshare law. About 35 states do have them. The states where the battles are most contentious are places with pretty strong, like, traditional cab.
So like New York?
New York, Massachusetts. Florida is actually having a tough time passing these laws as well.
So you would say those states would be grouped under maybe who's next or who's still working on the rules?
Yes. New York definitely still working. Massachusetts may get a deal done this year, but New York just adjourned again without getting one that would apply to the rest of the state. Now, New York City has a deal with Uber, and Uber can operate there, but other parts of the state they cannot.
And it's a large state. Some people don't know that. I mean, there's not only New York City, but there's Buffalo.
Yes.
And other Albany, Buffalo, other very large states. I mean, I've taken a bar exam in Albany, so I guess I can't get an Uber there, but I took a bar exam there. So that's really who's next. So everybody, as Clyde's saying, watch Massachusetts, watch New York. be careful of Florida, and that doesn't count all the other states where action could still happen, things could still change at any time, right?
Right.
And they do.
I mean, Uber just left Austin, Texas, actually, which is a huge hub for them. Because of disagreement with the city council, so it even goes down below the state level in some instances.
So it even goes to the local area. Well, that is something that everyone should really be paying attention to. And let's move on to our second, which is life insurance settlement. So who do these affect?
Anyone who maybe have a loved one who recently passed away, and that loved one may have purchased a life insurance policy that you as a potential beneficiary did not know about. Mm-hmm. And so what these settlements are about is...
So Clyde, can let's dive that even more. Let's say, Grandma June left me a life insurance policy.
Yeah.
So Grandma June is out there, she buys the insurance policy, I'm supposed to be the beneficiary.
Right.
Sounds good to me. I have a law background. I'm happy. I feel content with this situation.
Yes.
But what's going on? What's causing this to be a little bit frayed?
Right. So yes, Grandma June left you the policy. You didn't know about it, but your insurance company has not contacted you to let you know that. Meanwhile, Grandma June may have also had an annuity contract that was sending her
and let's tell some folks if they're not used to annuities. What's an annuity?
Yes, annuity is a policy that's very popular among retirees. Mm-hmm. You pay the premium, and then at a certain age, you start getting a payment. Like you get payments, right?
They give you a scheduled payment.
Yes. And it's
at a scheduled point of time for the rest of your life.
Yes.
That's how annuity works.
It's good for you to know that you have this steady stream of cash coming in. Right? Yep. You can plan better. Mm-hmm. So what the insurance companies are and were doing is they would check the Social Security Administration's Death Master File, which is just a database of everyone's Social Security number who has passed away. Okay. So the companies were checking this to see when they could cut off Grandma June's annuity payments. Okay. But not to tell you that, Grandma June has this life insurance policy that's
supposed to go to me.
Yes.
Okay. So that's really where the conflict is happening.
Yes.
So what are states doing about this?
So a couple of years ago, attorneys general, they audited a lot of insurance companies and found that this practice was going on. So what they did is they say, you owe all this money in unclaimed benefits. And as you know, unclaimed benefits go directly to the state.
So basically you're saying that this unclaimed property of this life insurance, which could be, let's say it's $100,000.
Yes.
The state found out it wasn't going to me, and the state said, well, let's make sure that's going somewhere. Let's put it into the unclaimed property fund, which is then in my name that I can go check.
Exactly. Okay. And now what states are starting to do is pass laws saying that insurers have to check this Death Master File to see, and they have to cross-check CUSDOT and to see what policies are on their books. Yeah. And if they're any beneficiaries, they have to contact those people. So Florida has done this. Idaho recently passed a law to do this. Almost 24 states have laws in their books. Okay. And some regulators are creating this policy locator system. And if you think you're owed money, you can contact them, and on their behalf, they will contact life insurers.
Now, what states, you said there's about 24 out there that have this. What states don't that I should be looking at?
What states don't? I'm actually not positive which states don't at this moment.
Okay, well, we'll get back to it. If someone's got a question on that, send that forward. We'll find out which states are next, and Clyde is also, and I will share with you the states that have, about the 24 who have the rule. So this is definitely an emerging area. The next thing, Clyde, that you and I have spoken on numerous times you know, because I find insurance very enlightening, as you know, is price optimization. So the question that I ask after that is your insurance company watching how you shop? And people won't understand that question right away, so why don't you jump into price optimization and then kind of say why my question makes sense.
Right. So price optimization, that's just a fancy way of saying that insurers are pricing their premiums on factors that aren't exactly related to risk, which is one of the bedrocks of insurance law is that.
What do you mean by risk, Clyde?
Risk.
Yeah.
All right. Okay. So your risk as a driver is, you know, your propensity to get into an accident. That's the risk that an insurer takes on when they agree to cover you, and, you know, you give them a premium in exchange for that, right?
Okay.
So that premium should just be based on how risky you are as a driver. But what price optimization does is it looks at your propensity to maybe shop around for other insurers, and they know that by analyzing their shopping data, right?
Okay. So they know I'm looking for the best price.
Yeah, they know your shopping habits, so they know maybe we can charge him a little bit more before he decides to go to another insurer. And where that's a problem is, again, that's not based on your risk, that's just based on your shopping habits.
So I could be getting the same rate as race car Roger,
Yes.
is what you're saying.
Yes.
Race car Roger hitting everything in town, you know, nailing things with his car. Because he and I are both shopping around, we could pay the same amount.
Yeah. Well, Race Car Roger is a better shopper. Actually, they know that you do not shop around.
Okay, so they know that I'm not shopping around, so I could end up with that same price.
Race Car Roger is a better comparison shopper than you are, is what I'm saying.
Wow. Well, I guess good for Race Car Roger, but
Yeah.
we should all be watching what's going on with that. So you said there's a lot of legal challenges out there to this kind of method, price optimization.
Yes, because when companies file their rates with state insurance departments, they don't say, "Hey, this is price optimization."
Yeah.
They're getting better at I guess kind of masking, I guess you could say, how the rates are determined. And this has become a priority for a lot of state regulators. 18 states plus District of Columbia
have already done something.
Have banned it. There are states that where legislation is moving through. I think Nebraska has a law or a bill that they're working on to do it. Yeah, Minnesota, Florida, Indiana, their regulators have all come out and say you can't do price optimization. Essentially.
So there's a lot of motion here.
Right.
Nebraska's fighting it right now. These other states have already done it. You know, it looks like there's 32 states out there still in the fold, right, that haven't done it. So this is something that is really going to evolve over the next year.
Yes. Yes.
Excellent. So Race Car Roger may not be getting such a great rate anymore. The next topic that you and I hit on is mandatory arbitration. And as a lawyer, I love this topic just because I get to use the word arbitration, and that's it's a very legal sensitive term. So do you want to kind of go over what mandatory arbitration is, and then is it enforceable?
Yeah, so this really is based on a case going on in Texas currently. Insurer wants to be able to offer a 20% discount to its customers if that customer waives their right to sue the insurer over a claim. And as the name implies, it goes into forced arbitration.
So let's talk about that for just a second. So it's mandatory arbitration.
Yes.
Let's say I'm in New Jersey, right, and I buy an insurance plan of a company based in Texas, and that company says to me, to sign this policy, you need to agree to appear in Texas and to deal with the arbitration rules of Texas if you have any problem with me. Is that what's going on?
Correct. And one of the reasons why consumer advocates are very concerned about this. They say, okay, arbitration only works when both sides are like when both sides have, you know, the same amount of firepower, when it's an even match. But, you know, just your regular average everyday consumer going up against, you know, an insurance company with a lot more resources that may be tougher in arbitration.
So you're telling me that Eric by himself is less ready to look at things than an insurance company with 500 attorneys?
Well, according to consumer.
According to the legal
advocates.
The legal idea, we'll not pose an opinion here, but we'll just kind of.
I've never seen an arbitration proceeding, so I cannot personally, you know, determine that. But
I've seen a couple, but then again, I run state track now.
So a lot of insurers and the advocates that I mentioned are watching this very closely because it could have, you know, a ripple effect and large implications for other states and the industry at large. Because, you know, insurance companies will tell you, I mean, we get tied up in so many little silly lawsuits.
Yep, that's the other side of the coin, right? Yep.
From plain lawyers who are just trying to take advantage of our customers and, you know, just extract these fees. So they say, you know, we really should be able to offer our customers this option.
Definitely.
Consumer advocates, again, they say, well, your customers are just signing away their rights and they don't know what that means in the contract. So we'll see how it plays out with the Texas Department of Insurance, what they rule on it.
So we'll have to really watch Texas, and then, you know, it'll answer the question, is it coming possibly to your state?
Yes.
A lot will be really riding on this ruling.
Yes.
And that brings us to, I believe, what is our last topic, which is actually captives. Now, I hadn't heard too much about captives before sitting down with Clyde, so I'm going to let him give us the definition of captives and kind of talk to us about what's going on there.
So a captive insurer is essentially an in-house insurance company. So you start Eric Hamisfar LLC, and the risk that...
Sounds pretty good so far.
Yes. And, you know, the risks that you need covered are kind of idiosyncratic, and there isn't really a market out there for it among the, you know, the available insurers. So you say, man, I need my own insurer to cover this, and they understand the risk better, so you just establish your own, essentially.
Okay.
And it's not very capital intensive, right? You just need, you know, lawyers and accountants, basically.
Yep.
And states are very excited about this business. They love it because, you know, it's high skilled jobs, it's revenue.
So they're excited about starting Eric Hamisfar LLC?
Yes, they're very excited.
Very excited. Because it brings them tax revenue, right?
Yes.
There you go.
Yes, it does. And you're seeing this kind of arms race almost among the states, like North Carolina, Tennessee, Georgia, Alabama. They're all trying to, I think New Jersey as well, they're all trying to go after this captive business. And they're doing things like, you know, cutting their premium tax rates, they're cutting capital requirements for starting them. They're giving the commissioner, they're creating laws to give the commissioner more leeway in, you know, setting capital standards.
So people should watch this not only because it's huge for the insurance industry to know what's going on when they can get rebates and things like that and tax incentives, but it's vital for new companies that are forming too to know, you know, where they could go and where they could be, right? Right.
And they're expanding the type of coverage that captives can be used, the type of risk that captives can be used to cover. That's also expanding. One of the things that states love about captives is that you hold board. A lot of these laws have clauses that you hold a board meeting there once a year. But now what we saw in North Carolina actually is they created a law to waive that requirement.
Yeah.
So that just shows you how competitive.
So I don't even need to go have a board meeting in North Carolina anymore. Eric Hamisfar LLC
Right. That just shows you how competitive it's.
So they're really playing.
Yes.
They're really trying to get as many insurers as they can in their state.
Yes.
Excellent. So what's next, I imagine, is just states continuing to ramp up. Do you see that as a possibility? States continuing to do different things, playing to the market?
Yes. Every day, you know, I see a bill come across my desk, or a proposal or a recently passed bill to do just that, to tweak some.
So we can put a super asterisk on this topic.
Yes.
We can say these are the hot issues, but captives is just flaming hot right now. Do you use the emojis on your phone? Is it one of the fire?
Sometimes.
The fire guy?
Sometimes I do.
Is that what it is?
Yes.
For the emojis? All right.
On fire. This is a three flame emoji.
3 flame emoji. See, you're only getting that here from State Track and CQ. Everyone, thank you guys for listening in, and I thank Clyde a lot for being with us today. He is truly an expert. He follows us every day. It's great stuff from he and his team. I want to throw out some other options that you have if you're not only tracking insurance, but you're tracking other things. I recommend that you look at the State Tracker's blog. It's free. It offers insights into the hottest state trends like the insurance trends that we talked about today. And it gives you tips on legislative tracking because, as everyone knows, legislative tracking is hard. It's intensive. It's difficult. In addition to that, I'd also like to tell you guys that the 50-State Project is also available. In the 50-State Project, State Track went around to 50 reporters in each jurisdiction, and each jurisdiction's reporter actually put their top 5 issues in the state. It's a great and quick and easy read to get you ready to talk about the issues that you need to know about. The other thing that I'd like to also tell you guys is not only do we have webinars in here, but we also offer through Roll Call Live the ability for people interested in holding events such as an insurance event to have one of those. Roll Call Live can bring the people, politics, and personalities of Capitol Hill to life on stage to discuss your insurance policy. So if anyone's really interested in doing that, let us know. Also, I'll throw in one plug for State Track, which is our system that helps people really track bills and stay on top of it. If anybody's interested in seeing it, if anyone's interested in having a report that we can give you for free that shows the status of maybe one of your issues, such as insurance today, feel free to reach out. We can set that up. This is my email right here, so feel free at any time to email me and let me know if you're interested in anything. And if you have questions. Additionally, at the very end of the presentation is the www.CQRollCall link. Click on that. You can see what State Track could offer you. Again, I just want to say that I appreciate everyone joining us today, and at this point, we'll throw it open to a few questions that we can answer back. I'll be typing the answers. If anyone's looking for anything additional to that, feel free to reach out. Thanks, everybody. All right.